Look, I'm not here to hype you up with hopium or wild predictions that'll never come true. I'm here to show you the numbers, the actual data. And when you see what I'm about to show you, you'll understand why so many analysts are saying that triple-digit silver isn't just possible anymore. It's probable. Right now, as I'm recording this in January 2026, silver is trading around $90 per ounce. That's already mind-blowing when you consider where we were. But here's what most people don't realize. We just witnessed one of the most explosive moves in silver's history. Let me put this in perspective for you. In 2024, silver closed the year around $29 per ounce. By late 2025, it had surged past $80. We're talking about gains of over 150% in a single year. That's the best performance silver has had since 1979. Think about that. We haven't seen this kind of move in over 4 decades. Gold had an incredible year too, gaining about 67%. But silver absolutely demolished those returns. Now, some of you might be thinking, okay, silver already tripled. Isn't the move over? And that's exactly what I want to address, because when you look at the fundamentals, when you look at what's actually happening in the physical market, we might just be getting started. Let's talk about something that nobody in the mainstream media is covering properly: the supply deficit. For the past 5 consecutive years, the silver market has been in deficit. That means demand has exceeded supply every single year since 2021. And we're not talking about small deficits here. In 2022, we saw the largest deficit on record at 272 million ounces. In 2025, even with reduced demand in some sectors, we still had a deficit of about 95 to 117 million ounces, depending on which source you look at. The Silver Institute is projecting that by the end of 2025, the cumulative deficit from 2021 to 2025 will be almost 820 million ounces. That's nearly 1 billion ounces of silver that has been consumed but not replaced. Think about what that means. When you have 5 straight years of eating into global stockpiles, eventually you run out of inventory. And that's exactly what we're seeing happen right now. COMEX registered inventories, that's the silver that's actually available for delivery in the United States, has dropped 70% since 2020. The London Bullion Market Association vaults have lost around 40% of their holdings. Shanghai inventories are at their lowest levels in a decade. Some industrial regions right now have barely 30 to 45 days of accessible silver reserves. Let that sink in. Less than 2 months of supply in some places. This isn't a temporary blip. This is a structural problem that's been building for years. Now here's where it gets really interesting. Why is there such a massive deficit? It comes down to 2 main factors. Supply can't keep up, and demand is exploding. On the supply side, global mine production has actually been declining. Since 2016, silver mine supply has dropped by 7%. You heard that right. It's going down, not up. And here's the thing about silver mining. About 70% of all silver comes as a byproduct of mining other metals like copper, lead, and zinc. So even when silver prices go up, you don't automatically get more silver production. The miners are focused on those other metals. Starting a new primary silver mine takes over a decade from discovery to production. Environmental regulations have gotten stricter. Ore grades are declining at existing mines. And even with silver prices at these elevated levels, we're not seeing a flood of new supply coming online anytime soon. The supply response is incredibly slow. Meanwhile, on the demand side, we have this perfect storm of industrial consumption that just keeps growing. Silver isn't just a precious metal anymore. It's become absolutely critical to modern technology. In 2024, industrial demand hit about 665 million ounces, and it's projected to surpass 700 million ounces in the near future. Solar panels are the big story here. Solar energy installations continue to hit new records year after year. And silver is essential in solar panels because of its superior electrical conductivity. In 2024, solar alone consumed about 232 million ounces of silver. Back in 2015, that number was only 60 million, almost a 4-fold increase in less than a decade. Electric vehicles are another massive driver. Each EV uses anywhere from 25 to 50 grams of silver, depending on the size. As the world transitions to electric transportation, that's creating steady, ongoing demand. Then you have artificial intelligence, 5G networks, advanced electronics, medical applications. Silver's unique properties, its conductivity, its antimicrobial qualities make it irreplaceable in many of these applications. But here's what really changed the game, and this is critical to understanding why we might see $100 silver or even higher. China just implemented export restrictions on silver starting January 1st, 2026. Let me explain why this is such a big deal. China controls approximately 60 to 70% of global silver refining capacity. They're not just a player in the silver market, they are the dominant gatekeeper. And on January 1st, they switched from a quota system to a licensing system for silver exports. Now, only large state-approved companies that meet very strict requirements can export silver. You need annual production of at least 80 tons. You need credit lines around $30 million. This effectively eliminates small and mid-sized exporters from international markets. Even Elon Musk tweeted about this, saying, "This is not good. Silver is needed in many industrial processes." When you have someone like Musk, who needs silver for Tesla's production, publicly expressing concern, you know this is serious. This is the same playbook China used with rare earth metals. They restricted exports to secure domestic supply and gain leverage in global trade. The difference is, rare earths are kind of obscure materials that most people don't follow. Silver is a globally traded commodity with massive investor interest. When China tightens the supply, everyone feels it immediately. What we're seeing now is this unprecedented divergence between paper silver and physical silver. In the futures market, silver might be trading around $70 to $90. But in the physical market, in places like Dubai, you can't buy a 1-ounce silver coin for less than $100 right now. In Shanghai, physical silver is trading above $80 with massive premiums. The ratio of paper silver contracts to actual physical silver backing those contracts is 356 to 1. For every physical ounce of silver that exists, there are 356 paper promises floating around. Think about what happens when people start demanding delivery of the actual metal. You get a squeeze. And that's exactly what analysts are warning about. Now let's talk about the gold to silver ratio, because this is another piece of the puzzle that's flashing major signals. Historically, the gold to silver ratio has averaged somewhere between 60 to 1 and 75 to 1. That means it takes 60 to 75 ounces of silver to equal the price of 1 ounce of gold. Back in April 2025, that ratio spiked above 100 to 1. Some measures had it as high as 104 to 1. That was an extreme reading. Only a handful of times in modern history has the ratio been that elevated. And every single time it's gotten that stretched, silver has come roaring back. Well, look what happened. By early 2026, the ratio had compressed down to around 57 to 1. That's a compression of almost 45 points in less than a year. And that compression represented silver's explosive outperformance. Investors who recognized that extreme ratio and bought silver, they more than doubled the returns of people who just held gold. But here's the thing. Even at 57 to 1, some analysts argue the ratio still has room to fall. If you go back to times when global silver stockpiles were abundant, the ratio was closer to 33 to 35 to 1. Today, those stockpiles are gone, vanished, yet the ratio is still above historical norms from those periods. If the ratio continues mean reverting toward those lower levels, silver has a ton of upside potential even from here. So what are the experts saying? Let me give you a range of predictions, and these are from serious analysts, not random people on the internet. Felipe Geisels at BNP Paribas told CNBC that silver could potentially reach $100 by the end of 2026. He said, and I quote, "We are still closer to the beginning than to the end of what could well become one of the largest bull markets in recorded history. I would not be surprised to see silver well north of $100 in the not-too-distant future." UBS lifted its silver price prediction for mid-2026 to $55, but that was before the recent surge. JP Morgan's Gregory Shearer estimated silver could rise toward $58 by Q4 2026. Metals Focus, the firm behind the annual silver survey, expects silver prices to hit $60 in 2026. But the really bullish calls, those are getting attention. Ned Naylor Leyland from Junius Asset Management said investors should assume higher prices are coming. Some analysts are even talking about $200 silver by the end of 2026. Mike Maloney and other silver bulls have made the case that triple-digit silver is not just possible, but baked into the cake, given the supply-demand fundamentals. Now, I want to be clear about something. Not every prediction is going to come true. Markets don't move in straight lines. We already saw this at the start of 2026. Silver hit a record high overnight, touching $80, and then dropped 8.7% in a single session. That was the largest single-day drop since February 2021. Volatility is part of the game with silver. But here's what's different this time. The fundamentals are rock solid. We have a structural supply deficit that's now in its 5th consecutive year. We have industrial demand that keeps growing because silver is essential to the green energy transition and modern technology. We have China restricting exports. We have inventories at multi-year lows. We have a gold to silver ratio that still suggests silver is undervalued relative to gold. And we have a massive disconnect between paper promises and physical metal. Let me give you a scenario. Let's say gold continues its bull market and reaches $5,000 per ounce. Some analysts think it could go to $8,000 or higher over the next few years. If the gold to silver ratio compresses to 50 to 1, which isn't unrealistic given the supply crisis, that would put silver at $100. If the ratio drops to 40 to 1, you're looking at $125 silver. If it somehow reverts to those historical 33 to 1 levels, you're above $150. Now, I'm not saying any of this is guaranteed. What I am saying is that the math supports the possibility. The fundamentals support the possibility. And increasingly, the price action is supporting it too. There's also this psychological element that people don't talk about enough. Silver is called poor man's gold for a reason. When gold gets to $4,000 or $5,000 per ounce, regular retail investors can't afford to buy a full ounce. But silver, even at $100, that's still accessible to most people. During precious metals bull markets, retail buyers historically flock to silver because of its affordability. And when that momentum builds, it feeds on itself. More buyers lead to more price gains, which attracts even more buyers. We're also seeing something unprecedented in terms of investment flows. In the first half of 2025, global silver-backed ETPs experienced massive inflows, reaching 95 million ounces. Since 2019, more than 1.1 billion ounces have been drawn from available mobile inventory into ETPs and other investment vehicles. That's metal that's being taken off the market and locked away. When you combine all of this, investment demand coming back strong, industrial demand staying robust, supply unable to respond, China restricting exports, and inventories depleted, you get a recipe for a potential price explosion. Now, am I sitting here telling you to go all in on silver? No, I'm not a financial advisor, and this isn't financial advice. What I'm telling you is to look at the data, look at the supply-demand fundamentals, look at what's happening in the physical market, look at the historical patterns, and make your own informed decision. Most financial advisors will tell you that precious metals should be somewhere between 10 to 20% of a diversified portfolio. Silver is more volatile than gold, so you need to be comfortable with price swings. But if you believe in the thesis that we're facing a structural supply crisis at the same time that demand is accelerating, then having some exposure to silver could make sense. The other thing to understand is that this isn't about getting rich quick. The people who are going to do well in this market are the ones who understand the fundamentals and have patience. There will be sell-offs. There will be volatility. Silver might touch $100 and then pull back to 80. That's how these markets work. But if the underlying supply-demand story continues to play out, those dips could be buying opportunities rather than reasons to panic. One more thing I want to mention. We're in this unique moment in history where central banks around the world have printed unprecedented amounts of money. Debt levels are at all-time highs. Inflation concerns are persistent. Geopolitical tensions are elevated. In that environment, hard assets like silver and gold tend to do well because they can't be printed. They have intrinsic value. They've been money for thousands of years. Silver has this dual role. It's both a monetary metal and an industrial commodity. That gives it upside from both directions. Economic growth, great, industrial demand goes up. Economic uncertainty, great, investment demand goes up. It's one of the few assets that can benefit from both scenarios. So to wrap this up, is $100 silver possible? Based on everything I've shown you, the answer is absolutely yes. Is it guaranteed? No, nothing in markets is guaranteed. But the probability is higher than most people realize. The math is there. The fundamentals are there. The supply deficit is real. The inventory drawdowns are real. China's export restrictions are real. The industrial demand is real. We just witnessed silver go from $29 to over $80 in roughly a year. A move from 80 to 100 is only 25%. Given everything that's happening in the market, that doesn't seem unrealistic at all. Some analysts think we could go much higher than that. My advice, stay informed. Watch the data. Watch what's happening with inventories. Watch what China does with those export licenses. Watch the gold to silver ratio. Watch industrial demand trends. And most importantly, don't just listen to hype. Look at the actual numbers, because when you do, when you really dig into the fundamentals, you start to understand why so many smart people are positioning themselves for much higher silver prices. The math doesn't lie. The supply deficit is real. The demand is growing. The inventories are depleting. And the price is responding exactly how you'd expect it to in that environment. Whether we hit $100 in 2026 or it takes a bit longer, the trajectory seems pretty clear. We're in the early stages of what could be a historic bull market in silver. And if you understand the fundamentals, you won't be surprised when we get there. That's all I've got for you today. If you found this valuable, make sure you're subscribed, because I'll be tracking these developments closely. The silver market is moving fast right now, and staying informed could make all the difference. Thanks for watching, and I'll see you in the next one.